Good Thursday morning, everybody. Kip Harrods here with your midday VRA investing update. Hope you're all having a good morning. I'm getting this started a little bit early today because we got a lot of good stuff. We got some really good. If you're joining us here, and if you're bullish like we are, got some good stuff for you today. I couldn't wait to get this one started. To tell you the truth, here in Texas we say every now and then a blind squirrel finds a nut, right? And I think this blind squirrel has found a nut or two. I think Tyler, my business partner, oldest son, agrees with me on this. Look, big turn of the markets today. Yesterday was kind of ugly. I'm going to talk about that. I'm talking about Jamie Dimon's bizarre comments yesterday. I'm also going to talk about what his chief market strategist, Marco Kolanovic, said right after he said it. He just discounted everything Jamie Dimon said. Let me tell you the markets real quick. Right now, NASDAQ's up a big 130. This is textbook. Again, textbook. NASDAQ up 1%. The semis are up 2%. The Dow was down big. It just went positive. Russell 2000. Small caps are so cheap here. Got some great data for you on that too. Russell 2000 up 1.3%. And again, we're green across the board except for the Dow, which is almost green now. So the VIX is down 3%. It's below 25. I think it collapses from here. I've been saying that for some time. And the 10-year is 2.91%. Now, yesterday, the markets got their panties in a wad when Jamie Dimon came out and said the U.S. economy was facing a hurricane, which, it got a lot of attention. The market sank on it. I'm sure you read it, right? You probably saw the interview. Did you watch all of it? Because I did. And I didn't watch, I read it. And what he said really was, look, we don't know. It could be a tropical storm. It could be this. It could be that. It could be, we don't know. We don't know. My question to Jamie Dimon is, man, where you been? Please, Jamie, tell us something we don't already know. We got inflation at 40-year highs, right? We have a Biden administration, Team Biden, okay, Team World Economic Forum, Team Communist, okay, that's doing everything in their power to destroy America. This is not new stuff. We have a war with Russia and Ukraine that's going on. That one false step, one stupid mistake, and we're at World War III with the only country on the planet that has more nukes than we do. So now Jamie Dimon all of a sudden is waking up to a potential hurricane. Welcome back from under your rock, Jamie. You only run the biggest bank in the country, one of the biggest in the world, right? But it got interesting. Right after that, Marco Kolanovic, who is J.P. Morgan's chief market strategist, he's top dog. He reports directly to Jamie Dimon. He came out and he said, if you've been watching us here, if you read our stuff, if you're a subscriber of ours, and if you are, thank you very much, and thank you for watching, folks. Kolanovic came out and said yesterday, again, this is right after Dimon said exactly what we've been saying. I'll read it to you. We have near record cash balances on the books with money managers, flush with cash, right? In other words, very concerned. Investor sentiment is at extreme fear, right? Like some of the most fearful readings you'll ever see. Kolanovic sees no recession on the horizon. That matches what we believe here. And again, our top economists that we follow, better than Kolanovic for sure, is Ed Hyman at Evercore, who has done this 50 years, best in the business, low-key guy, not on TV all the time at Evercore, but he's a real rock star. He's a Rain Man, he's really the guy. Sees no recession. Matter of fact, he says the economy looks really good, right? So here we have a market. We already had three bear markets in 4 years. This one was because of fears of a recession and because of Fed rate hikes, etc. But what if we don't have a recession? I want to hang with Kolanovic for one point. He also said something interesting. And now I'm telling you this morning because I heard it from other people I trust this week. Kolanovic says, and I'm going to read it the way he wrote it. He believes the war in Eastern Europe, so he didn't say the Putin's war or Russia's war against Ukraine, none of that. He calls it the war in Eastern Europe. That's exactly what it is, which could have been prevented had this criminal oligarch president puppet, Zelensky, simply said, you know what, we're not going to join NATO. Not going to do it. Boom, guess what? Russia doesn't invade. And if they try to get rid of some of the Nazis that they have in the country, that might help too. The Azov battalion that they are, that we're funding directly. $60 billion now is the total from the U.S. alone. But anyway, he says that as the war in Eastern Europe will likely converge to a settled solution in the second half of this year. In other words, it's ending. Now, this matches, again, what I've heard from people that I respect and trust more than anybody else, that Ukraine is getting their heads handed to them. This is no secret, unless you're reading the propaganda from Fox News or Wall Street Journal or any of the other propaganda networks here in the U.S. They're trying to convince us that, hey, they got a chance. No, they don't have a chance. It's over. And the only way out of this for Ukraine to save any face at all and without destroying the entire country is to come to a brokered agreement. Kalanovic believes that's going to happen in the second half. I believe that's going to happen. People I trust believe it's going to happen. So the tea leaves point to this happening. Folks, what do you think the market's going to do when the market realizes that this is happening? What if it's already starting now? What if that's why we've had this big move higher in the last week or so, right? I think there's probably, the market's smarter than everybody. It discounts all of this, right? I think that's exactly what's happening here. And I think that's why we're going to go so much higher. That's one of the big reasons. That's going to bring down inflation, right? You probably saw today that Biden now is going to go to Saudi Arabia and meet with the same royalty, right? Saudi Arabia that supposedly killed Khashoggi, and that they were blackballed. They you would never meet with them. And now, because oil prices are so high, and Biden can't bring himself to drill more here, he's going to try to beg Saudi Arabia and Russia to give more oil to bring gas prices down, because Democrats know they're already going to get brutalized, right, come November. But with gas prices soaring and food prices soaring, it's all tied together, right? And of course, the war, it's going to be brutality come November. And that can't get here soon enough, right? That's another big positive, by the way, for the market. So, again, Kalanovic is very, very bullish. I think Jamie Dimon is not to be trusted. He's just not. I mean, I talked about this yesterday. If you know the history of J.P. Morgan and Jamie Dimon, then it's one of a lot of big criminal law, not civil, criminal lawsuits that they've lost. No one goes to jail. No one. Again, they have all the power, right? So they don't pay the price that you and I would pay. But again, I don't think he's to be trusted. That's my view. Kalanovic, on the other hand, I think he's spot on here. Okay. Also, I put this out on social media today. I'm just going to kind of repeat it because this really sums up where I think we are today. The time to be bearish on the U.S. stock market is over. There was a time to be bearish. We were in a bear market for over a year. That is now past. We already know the bad news, right? The bad news is known. And there could be more bad news, but we know a lot of bad news. And what do we know about bull markets? Bull markets like to climb a wall of worry. Again, we just had our third bear market in 4 years. Investors are in extreme fear, a lot of cash on the books. This is when markets go higher. They climb that wall of worry. No signs of recession. Corporate earnings are soaring. They are. Look at housing and transportation. The stocks may have been hit, but housing prices continue to rise. The housing market's supply-demand story there is incredibly healthy. And transportation stocks are weak, but transportation itself is showing no signs of slowing. Our youngest son is in that business with a logistics company, and they see no signs of anything slowing. A big one too. So again, I think pullbacks have to be bought here. Small caps are dirt cheap. Based on fundamentals, it comes yesterday, based on earnings, right? Small caps are the cheapest they've been in a quarter of a century. They're right now trading at the lows that they are at from the financial crisis and from Rona, coronavirus insanity of 2020 lows. So buying small caps, buying tech, buying NASDAQ, buying semis, the things that have been hit the hardest, right? It's FIFO if you're an accounting person, right? First in, first out. These were the first stocks to get hit. They're the first stocks now to lead the way higher. FIFO. All right, folks. Hope you're having a great day. NASDAQ's up 133. Again, Russell 2000 up 1.3%. We're buying pullbacks. I think that's a smart money play here. Have a great day, folks. Always appreciate you watching and come and join us anytime for 2 free weeks. Check it out. Get our daily updates, our research, all of our commentary, special reports, all of that at VRAinsider.com. Again, VRAinsider.com. We'll see you back here again tomorrow at the close of the podcast. And, of course, again, tomorrow morning about the same time. Have a great day, everybody.